stand up for the champion, for the champions. Oh, it's indeed a season of champions. We are all champions. All Nigerians are champions. Permit us to begin this episode of Tax Matters by congratulating all the children and youths of Nigeria on the occasion of Children's Day, May 27. And of course, the entire citizenry of Nigeria on the occasion of Democracy Day, May 29. This year's celebration of Democracy Day is a special one. We are transiting from one government to the other. In fact, it is not just from one government to the other, from one political party to another. Our democracy has indeed matured. 16 years of transiting from one government to another, and now from one party to another. If that does not make us champions, then tell me who is a champion. I feel proud to be a Nigerian.
Proudly Nigerian.
Once again, congratulations, Nigeria. The opening clip on this episode is an excerpt from the final ceremonies of the National Tax Quiz Competition, which was held as part of the 17th Annual Tax Conference of the CITN.
The CITN has been quite busy in the past few weeks. Of course, you know the CITN, the Chartered Institute of Taxation of Nigeria, chartered by Act No. 76 of 1992. The CITN is the only body recognized by law to regulate the practice of taxation in Nigeria. It comprises of tax administrators, those who work at various revenue authorities across the country, and tax practitioners, those in private practice. Within the ranks of CITN members, you will find accountants, economics, lawyers, and many more.
So what's been going on?
First, on Thursday, 7th of May 2015, the CITN formally commissioned its own secretariat, aptly named Tax Professionals House, in the Central Business District of Alausa in Ikeja, Lagos. To underscore the historical significance of the event, many past presidents of the institute were led to the event by the very first president, the Doyen of Taxation in Nigeria, Chief David Ajibola Olonleke. Going down memory lane, the president of the institute traced the history of the movement of the institute secretariat from place to place until finally betting at this magnificent edifice.
Right from inception, the institute have been carrying out its responsibilities and operations from rented offices. No doubt, this had affected the expansion capacity of the institute, as we are always constrained to limit our operations within the confines of the available spaces. Federal Revenue Service hosted this institute, the secretary of this institute, from inception. Then at its investigation branch at Oyemi Street, off Broad Street in Lagos, and then on to Ibadan Street, Ebute, and then again moved on to Alabode House by Ilupeju area along the Corridor Road, and ended up in Maryland, from where, when the building collapsed, we moved to LCCI Convention Center, by MK Abiola Gardens there. And so we're battling here today. To God be the glory. Permit me, distinguished ladies and gentlemen, at this juncture, to inform you all with the deepest sense of satisfaction that this project was completed without any loan from any financial institution. The building was solely funded through members' contributions and donations for well-meaning stakeholders.
Chief Olonleke also went down memory lane.
I like to remember also the role which some of other members, like Chief Ijewere, played in this matter.
Another past president, Mrs. Bimpe Balogun, also paid tribute to some of the founding fathers of the institute.
There are two very distinguished people in our society today that I believe would have been appropriate for them to be a part of this day. One of them had been mentioned by the Doyen, the person of Mr. Emmanuel Ijewere. He was once a vice president of this institute. Another very important person that I wish was also here is Mrs. Babington Ashaye.
The President and Commander-in-Chief was represented by Mr. Innocent Ohagwa of the FIRS, while the Governor of Lagos State was represented by the Special Advisor to the Governor on Taxation, Mr. Bola Shodipo. Some members of the Institute expressed joy on the occasion.
It is a dream come true.
Today is a very exciting moment, exciting day to all the members of the Chartered Institute of Taxation of Nigeria. We are proud to have a wonderful edifice. We are aware that this is the first taxation institute in Africa that have been able to produce a wonderful edifice of this nature. So we are particularly very excited and very proud to belong to this institute.
Of what importance is this house going to be to tax professionals?
Well, we're going to build a capacity, in the tax profession now. We're thinking of the tax academy, and we'll be thinking of other future plans that will enhance the tax profession in Nigeria.
The building itself is given the kind of profile, the kind of image that the past presidents have striven all along to attain for this institute.
We move on to the flagship event of the CITN, the annual tax conference. The 17th in the series took place in Abuja from the 13th to the 16th of May 2015. The 17th annual tax conference was unveiled to the public at a well-attended press conference which was held at the new secretariat in Lagos on Wednesday, the 6th of May 2015. Many issues germane to the smooth running of the tax system in Nigeria were thrown up at the press conference.
There should be no privatization of revenue collection, whether it is done by a professional. Because at the end of the day, we're all Nigerians.
The 17th annual tax conference kicked off with the traditional hospitality night, which was held in the evening of Wednesday the 13th to welcome participants to the annual tax conference. Presentations were made by various district societies of the Institute. On Thursday, the 14th of May, the 17th annual tax conference got off to a roaring start with the technical session at which two cerebral papers were presented, both tackling issues around the theme of the conference.
I'm of the view that our tax system has developed enough for us to use local content. There is no basis in my view why foreign consultants should play without control within the system. There is no manpower for the administration of the Nigerian tax system, which I believe the Institute does not have. Then, there is a declaration of intention to introduce luxury surcharges ranging from 1% to about 39% on different luxury items. And such items include private jets, luxury cars, a surcharge on those of you who travel business class or first class to this conference, then 3% luxury charge on champagne, exotic wines, then 1% FCT mansion tax on residential properties, whose value exceeds 300 million. The policy to make the rich pay more is, in my view, not far-reaching. Because if you look at all the items that I've listed as those that will attract surcharges, the people that are patronizing them are actually very few.
What are fiscal incentives? Mainly tax incentives, but is not restricted to tax incentives. Our focus this morning is to be looking at it from the point of view of tax incentive, because that is a source where government revenue is impacted. We can have it in form of tax relief, or tax concession, or tax exemption, or tax allowance, or tax credit, or tax holiday. Now, whichever is given under any of this category, there's an opportunity cost to the government. Government is losing something to give this out. And what does government expect? Investment, improvement, development, economic growth.
The technical session was suspended around midday to allow for the formal opening ceremony of the conference, which was presided over by the then Coordinating Minister for the Economy and Federal Minister of Finance, Dr. Mrs. Okonjo-Iweala, who was ably represented by the Minister of State, Ambassador Bashiru Yuguda. Ambassador Yuguda brought good news about the government's efforts aimed at tackling the menace of multiplicity of taxes.
Let me start on a very good piece of information for all of us here. Yesterday, we had Federal Executive Council, and I had the honor and the privilege of presenting a memo that has to do with the harmonization of taxes and levies across the country. In November 2014, a presentation was made to the National Economic Council. National Economic Council comprised of Vice President and all the governors. It was at that meeting that we presented that challenge, that across the country we are having issues of double taxation, illegal roadblocks, there's no policy in some of the states, and the various challenges that we are all having in the tax administration and regime in the country. So a committee was set up to harmonize, headed by the Minister of Finance, of course with all the Attorney Generals and major stakeholders. And I believe you're also part of that. You made a submission because I saw that. So yesterday it was approved that there will be harmonized tax and levies across the country. You will agree with me, part of the problem we are having is the rules at the national and then the subnational level of government when it comes to tax administration in this country. So even though the subnational level of government wants to increase their IGR, I believe three things should guide them: correct assessment, making sure that without undue harassment there is compliance, and also making sure that in the process of doing that there are tax-friendly measures and policies. It is a different thing to get money, it's another thing to raise your IGR, but it's another thing also to encourage businesses. SMEs in this country are mostly in the informal sector of the economy, but they contribute over 45% of the GDP. Now, in the process of collecting money and taxes and levies from them, I believe they should not be put out of business. That is very important because they have to be in business for us to make money. And then for them to make money, we also have to be fair in assessment of taxes to them.
Earlier in his welcome speech, President and Chairman and Council of the CITN, Mr. Mark Anthony Dike, spoke on the choice of the theme of the conference as the Institute's contribution to the search for Nigeria's economic development. Mr. Dike also laid out the Institute's views on the menace of multiplicity of taxes.
Raising tax revenues remains the right and indeed responsibility of each state, but this requires both national and international cooperation in order to tackle tax evasion and illicit financial flows.
The President also made some demands on behalf of the Institute.
Some of the demands, amongst others, are the issue of writing of tax laws to remove obsolete provisions and making them relevant to the present-day realities, easy to read and understand, which in the long run would engender voluntary tax compliance and thus make for easy and cost-effective administration. Annual Appropriation Acts should legitimize the yearly expected revenue and expenditure. Note should be taken that realization of revenue estimates depend on the effectiveness of the tax system, vis-à-vis the tax laws. Therefore, tax laws should be updated. You should use the opportunity of the annual budget cycle to ventilate what the tax direction, policy direction of the country should be, because we should be talking about what resources will be needed before you start talking about how to spend the money. You cannot spend what you have not generated. Creation of the Office of Advisor on Taxation at federal and state levels of government. This has been the hue and cry of the Institute, and we have emphasized this in our various memoranda to federal and state governments. The creation of this portfolio is expected to facilitate information flow and prompt the urgency required on tax issues. The issue of abuse of tax waivers and incentives, in as much as the country desires more foreign direct investment, tax incentives and waivers, if granted at all, should be sector-based and granted through tax laws so as to promote transparency. Government's indication to narrow the window of incentives and waivers should send a clear signal that government no longer wishes to do business as usual. Targeting of the informal sector, the Institute, of course, calls for enhanced and enforced tax compliance of the informal sector with a view to expanding the tax base. Indeed, the more the taxpayers that are in the tax net, the higher the tax yield and the better for the tax system. The last area, which is a burning issue, is the issue of our use of tax contractors. Though the federal government has reportedly banned the use of private tax consultants or tax collectors to collect taxes, their continuing use to the detriment of enhancing the infrastructure and capacity of the federal and state revenue agencies to carry their statutory assignments without let or hindrance is also a matter of much concern. What is even becoming more worrisome and dangerous is the invidious attempts in some states to privatize revenue collection against all known canons and conventions.
Tax Matters sought further clarification from Ambassador Yuguda on the roadmap approved by the Federal Executive Council. What is the status of that regulation? Does it have the force of law, or is it going to the National Assembly, the harmonization of taxes and levies?
The National Economic Council has approved the roadmap. What we have done yesterday at the Federal Executive Council is I made the presentation to the Council, and they agree that that should be avoided. Avoidance of double taxation, avoidance of unfair assessment, avoidance of tax administrators in their zeal to improve on their IGR will go all along. And so there are tax laws that also has to be reviewed. So that will be taken down to the National Assembly, and we believe the next National Assembly will do justice to that.
During the years that it took us to arrive at this stage, did you get the impression that the states and the local governments are ready to cooperate?
Well, you see, it's twofold. In as much as they try to cooperate with us at the national government, they also have what they have to do in order to improve on their IGR. So that is always the problem.
Thereafter, the plenary session resumed with more papers and breakout sessions.
On Friday, the 15th of May 2015, more papers were presented, followed by the formal closing ceremony. One major highlight of the 17th Annual Tax Conference was the introduction of the Tax Scholar Competition. For the competition, students of institutions of higher learning across the country were brought together to showcase their knowledge and their understanding of the Nigerian tax system.
One of the following is not a member of the Federal Inland Revenue Service, FIRS Board. A, the Executive Chairman of FIRS. B, the Governor of the Central Bank or his representative. C, the Group Managing Director of the Nigerian National Petroleum Corporation, NNPC. D, none of the above. None of the above. D. Correct. A round of applause for him.
The first round of the National Tax Quiz Competition was held in the afternoon of Thursday, while the final and prize-giving ceremony was held as part of the gala night on Friday.
What is the rate of tax payable by every company except small companies? A, 30 kobo for every naira. B, 25 kobo for every naira.
B, 30 kobo for every naira.
Correct. A round of applause for him.
Number 2.
How is income from dividend, rent, or royalty categorized? A, personal income. B, income benefit in kind. C, unearned income. D, earned income.
C, unearned income.
Correct. For the maiden edition of the CITN Tax Quiz Competition, our first prize winner, which is the third position, with 83.5 marks is Olisa John Tochukwu from University of Ilorin. Our second position and second prize winner is from Abubakar Tafawa Balewa University, Bauchi, Yakubu Amro. Ladies and gentlemen, all the way from Kefi, from the Nasarawa State University.
Let me appreciate the donors, those who have made this program possible. CI10 has tried to move to the next level, and as a result, that is why we are introducing this program, Catch Them Young.
Congratulations to the winner, or should we say winners, Nasarawa State University. That boy is indeed a good ambassador. We also say congratulations, kudos to the CITN for this initiative and for a successful 17th Annual Tax Conference, just as we wish you the best of luck as you prepare for the 18th edition. As you saw earlier in the program, the immediate past Minister of State for Finance, Ambassador Bashir Yuguda, was asked to comment on the blueprint, the roadmap that was approved by the Federal Executive Council on Wednesday, the 13th of May. That interview was conducted on the sidelines of the opening ceremonies of the 17th Annual Tax Conference on Thursday, the 14th of May. The very following day, on Friday, the 15th of May, Tax Matters sought the comments of the acting executive chairman of the Federal Inland Revenue Service. As executive chairman of FRS, you are the chairman of Joint Tax Board. Where would that roadmap lead us?
I would just say to you that for us in government, it's a happy story so far. It's been about 2 years now, because you keep hearing that the cost of doing business in Nigeria is huge and enormous. Now that the new document, which is the amended act now, has been ratified. Yes, it is true, it may have to go to the National Assembly. It has accommodated the needs and concerns of many of the states. And Lagos has done a very good job in his own case. You know, the current governor, as much as possible, sanitized it and brought it before the House of Assembly, and it was passed into law. So no local government council could just behave the way it likes. But that's not what you have in some other parts of the country, where they will even be engaging private collectors or private contractors, revenue contractors, to help them collect taxes. They will be putting barricade on the road, federal government road. They will put barricade there, you can't go. Spikes they will put there so you cannot escape. All those have been addressed now. A situation where a trailer or a vehicle, lorry, will be leaving Maiduguri to bring food items to southern parts of the country, and every part of the state he gets to, they want to levy some form of fee on him. It's unacceptable, because that itself is increasing the cost of doing business. It's inhibiting the movement of goods and persons. So that new regulation has addressed it. But we can still do better, but we'll make do with what we have approved for ourselves today. But going forward, I believe that there can still be more improvements. You can imagine when you say local government councils are empowered under that act to collect radio levy. You quickly ask yourself, what is the relevance of a local government council to radio levy collection? Radio levy collection was apt in those days when we were using rediffusion and we were buying radio, carrying radio all over the place there. It was under their control. But today, there is NCC at the center that is driving all this. So why will our broadcasting corporation? So there are some gray areas, you know, in even in the amended document. But there are useful resolutions which were presented to council and which was eventually ratified. So we can be rest assured that all the state governments will be on top of their game They'll be able to supervise the local government chairman, and no local government chairman will go and engage a local contractor to help it collect money from people who are just passing their states.
Was this part of what was passed across to them when consultations were going on?
Yes.
So you are convinced that the states have bought in already?
They have, because they have 5 states that represented the entire country in that committee. And it was chaired by the governor of Gombe, Alhaji Dankwabo. Everyone who needed to say something actually have said all that they needed to say before they came to the state revenue boards were also represented. I'm very optimistic about the document that is coming out eventually, which will now be applicable across the country. And it gives power again, re-emphasizing the need for the Inspector General of Police to arrest anyone who puts some barrier on the way of movement by the people.
It is obvious that the 8th National Assembly already has its hands full, even before it is inaugurated. Whoever becomes the Senate President, whoever becomes Speaker of the Federal House of Representatives, help. The business community is complaining. Your people on the streets are complaining about the menace of multiplicity of taxes, especially the mounting of roadblocks to collect taxes on the roads. On that note of appeal, we got the curtains on today's episode of Matters from Christina.
Thank you for watching.
Have a good week ahead.